That's right, it is Zoom. We're talking about Zoom today. One of the hoodest stocks in the market. There's no doubt it's a hood one. Some people call it hot. Personally, I call it hood. So the thing was already up nearly 10% in the normal trading session, up 9% after hours as well. Quite the move. I can't lie to you. There's definitely some movement going on here. I'm gonna guess. Obviously, this means we had some good earnings. Again, I expected a beat in terms of a revenue standpoint, but wasn't quite sure what to think of in an EPS line. Obviously, because there's expenses that come with more people using the platform. But let's look. So, non-GAAP EPS of $1.22 beats by 43 cents, and a GAAP EPS of 87 cents beats by 39 cents. Okay. This revenue line is absolutely schmacking. Schmacking. Revenue of $882 million, up 368% year over year, beats by 71 million. Now that is a company that is officially growing like no one's freaking business. 467,100 customers with more than 10 employees. That's quite a bit, by the way. Quite a bit of businesses with more than 10 employees, up 470%. That's crazy. You can just see how many people are flocking to this platform. Again, I've talked about it before. This is definitely the biggest beneficiary of everything going on, because a lot of times these companies, frankly, work from home has been encouraged. They haven't been allowed to do boardroom meetings. They haven't been allowed to really have meetings in general. They've had to transfer to these Zoom meetings digital format. It is beneficial, and frankly, it is the future for most companies. So a vast majority will not be going back to the traditional meeting formats. They will be sticking with Zoom, barring any issues with the platform. That Zoom will be the number one to go to. So really nice. 1,644 customers contributed more than $100 million in the trailing 12-month revenue, which is up 156% in the same quarter. As far as guidance is concerned, they're actually giving guidance here. They're expected $900 million to $905 million. The consensus was only $835. Quite the incredible beat on guidance here. Income from operations is expected to be $295 to $300. And non-GAAP EPS is supposed to be between 95 cents and 97 cents versus really a consensus of only 70 cents. Quite substantial. For the full year, expecting $3.7 to $3.78 billion. That's a consensus of 3.5 only, so quite a beat there too. $200 million beat. It's quite a lot. And an EPS line between 359 and 365 versus a consensus of 296. If they're able to hit those metrics, that's quite incredible. Even if they don't, this is quite incredible to begin with. Even the consensus is quite incredible. So we look at some of these finer details here and what they are able to do. Obviously, we saw a massive revenue line. Consensus for EPS was only 43 cents. Beat it by 43 cents. Quite impressive. Operating cash flow was up 993%. Are you kidding me? That's quite impressive. And we saw the guidance, so I think we're ready to look at this press release and see what it has to offer for us. Fourth quarter GAAP income from operations, pretty nice to see here. Came in at 256, up 2,300% year over year. Quite impressive. Quite impressive. So fourth quarter highlights, obviously we saw great stuff. GAAP net income came in at $260 million. Quite crazy for the fourth quarter here. That's quite incredible compared to the GAAP net income attributable to common shareholders, which came in at only 5 cents per share, 15 million prior. So that's quite the improvement year over year in terms of that aspect. For the full year, quite incredible. Full year saw a 326% growth. Again, they're expecting similar numbers this year, which is going to be quite incredible against really tough comp revenue numbers here. How are you supposed to have a comp growth continue to be 300% every year? You can't is the answer, but they're going to try their darndest to see that if they can make this happen. Net income for the full year came in at $671 million compared to $21 million of the year prior, which is, again, quite an incredible growth there. It's substantial. Substantial. Quite substantial. We saw the outlook. Frankly, this is a pretty basic press release here. Obviously, you need to see how the balance sheet was impacted by this crazy year for them. Give me a year-over-year comparison here, left to right. Total current assets right now in this company sitting at $4.7 billion, really $4.8 billion compared to $1.1 billion. All of that mostly is because of an increase in cash and cash equivalents, and marketable securities increased by quite a bit. Total assets in general, 5.29 compares to 1.29 of the year prior. So good growth there, and again, current assets is the majority of that growth in terms of that. Now, total current liabilities grew by quite a bit as well, but not nearly as much. $1.2 billion there compared to $333 million of the year prior. So there's significant growth there, but we did see assets grow by quite a bit more. Total liabilities in general, 1.4. Really no long-term debts on this company, which is pretty crazy. It's pretty darn cheap. $1.4 billion compared to $455 million, I should say, of the year prior. So overall, stockholder equity increased by a significant amount, and we saw that with that net income line, $3.8 billion compared to $833 million. They grew $3 billion here in terms of this equity line, and the balance sheet itself grew by $4 billion. So overall, the balance sheet, which again, I could say is relatively small for the company, but it wasn't small for what it was prior. It's just this year has called for this much growth in this balance sheet, and I'd expect to see it grow by even further. Increase in cash equivalents coming in the future as they need to expand. Really, they need to expand the business more, and that means expenses are going to go up. No shocker. But this is incredible stuff what they're able to do. You do need to take a look here. Obviously, it's no shock. The stock's up 260% in the last year, trading at a market cap of $120 billion with a PE ratio over 280. Now, the market cap of 119, I think it's quite incredible. Quite a substantial market cap when you're talking about a company that for the full year, in terms of a revenue standpoint, came in at $2.6 billion. It's quite pricey. I don't think you can lie. But again, we are talking about a company that's expected to grow another, 200 to 300% this year. And frankly, is a company of the future. I mean, we can't argue that this company will be one that's sticking around for a long while, and it's going to be commonly used by a vast majority of businesses here in the future for any sort of office-related setting. I mean, this is where meetings are going to take place now, unless they have any sort of major security issues, whatever that might be. But Zoom doing really good things. I personally don't think I'd buy it at these valuation levels, but I think they're doing really good things, and I do think there's definitely room for growth in this stock over the long term. So if you're into it, you're into it. If so, I mean, obviously, I hope you get some good luck here. Hope you have a good day, and I will see you next time.